Forex trading, or foreign exchange trading, can seem complex at first, but with the right approach, you can make $150 daily by using fundamental analysis. Here's a simple guide to get you started. Firstly, understand the basics. Forex involves trading different currencies. The goal is to buy low and sell high, making a profit from changes in currency values. Fundamental analysis is crucial. This means studying the economic factors that affect currency values. Keep an eye on economic indicators such as interest rates, employment numbers, and GDP growth. These indicators can influence a country's currency strength. Stay informed about global events. News plays a significant role in Forex trading. Be aware of political developments, economic announcements, and global events. For example, if a country announces positive economic growth, its currency may strengthen. Choose a reliable broker. Look for a broker with a good reputation, low fees, and a user-friendly platform. This will make your trading experience smoother and more profitable. Create a solid trading plan. Define your risk tolerance, set realistic goals, and establish a strategy. A well-thought-out plan can help you navigate the market and make informed decisions. Start with a demo account. Most brokers offer demo accounts where you can practice trading with virtual money. This allows you to get comfortable with the platform and test your strategy without risking real funds. Practice risk management. Only risk a small percentage of your trading capital on each trade. This helps protect your funds in case the market moves against you. Use technical analysis as a supplement. While fundamental analysis is essential, combining it with technical analysis can enhance your trading decisions. Technical analysis involves studying price charts and patterns to predict future price movements. Use technical analysis as a supplement, while fundamental analysis is essential. Combining it with technical analysis can enhance your trading decisions. Technical analysis involves studying price charts and patterns to predict future price movements. Stay disciplined. Emotions can cloud judgment in trading. Stick to your plan, even if the market doesn't go the way you expected. Learn from both successful and unsuccessful trades to improve your skills. Keep learning. The Forex market is dynamic, and staying informed is key to success. Continuously educate yourself about market trends, strategies, and economic indicators. Remember, making $150 daily through Forex trading with fundamental analysis is achievable with the right approach. Stay informed, create a solid plan, and practice disciplined trading to increase your chances of success.